Is it time to buy Evolv Technologies stock after its post-earnings dip? We're here to talk about it. Let's get started. Evolv Technologies delivered a strong quarterly earnings report in terms of revenue, with a similar picture for earnings. And I'm going to want you to touch on those results here, Thomas, because despite the initial spike, the stock dropped over 6%. What's important to know?
Well, I think primarily the issue right now is that this is still a very small micro cap company with only about 20 million in quarterly revenue. The outlook is good, but the now is teensy weensy. There's not a lot of ownership. It's got a relatively high short interest, and there is some significant overhead resistance due to the YOY decline in share prices. So outlook is good. Revenue's ramping, profitability is ramping, but the market's working through some issues. But should come out okay, assuming the company can continue to gain traction.
Chris, can you tell our viewers some more about the key achievements and milestones that support Evolv's optimistic outlook, maybe particularly concerning the adoption of its Evolv Express product and growth in the various market sectors here?
Right. So, the earnings report was generally very positive. They reported over 600 new contracts for their Evolv Express product in the last quarter. The company's now, they said they're scanning somewhere around, I think they scanned over 200 million people in the last quarter. They've achieved the goal of over 1 billion people scanned overall. The company now says they're scanning more people every day than the TSA is. So, there is widespread adoption going on for their product. As some people would expect, hospitals are one of their big areas of growth. I think they saw a 50% growth in the hospital sector this quarter. They've now they signed on with an NHL hockey team, and so now they're in with all of the 5 major professional sports leagues. They at least have one venue or more in each of the 5 major sports. And of course, unfortunately, but we know schools are a major audience for them as well. So again, there's a lot of growth happening. It's just, to Thomas's point, this is a small company, an emerging market, let's just say that.
All right, let's talk a little bit more about the emerging distributor model. How might Evolv Technologies transition towards a distributor model? Particularly, I'm talking about the collaboration with Columbia Tech, and how is that going to impact the company's revenue streams, balancing hardware sales and software as subscription services? So with that, what challenges or opportunities are going to arise during that kind of shift we're looking at?
Yeah, that was something that came out during the earnings report. They're actually, it's actually going much smoother than the company expected. They're growing that business. I think they saw like a 30% growth in that business in the quarter. They're expecting that number to get higher in the coming quarters. What that's going to do, and analysts were asking about this, and the company was talking about it, was it's going to lower the amount of annual recurring revenue, ARR, that the company generates. So they're not going to get as much of that. However, what they said is they do have a licensing agreement with Columbia Tech. So some of the money that was being counted as annual recurring revenue is now going to be counted as licensing revenue. So that's going to be something that investors are going to have to work through in the next couple of quarters, just to see, okay, so this number's a little lower, but this is higher, and how does it all shake out in terms of overall revenue and profitability?
All right, so I've seen some news about concerns from the FTC regarding Evolv's marketing claims. Specifically, they're kind of investigating whether that the AI-based system correctly identifies weapons, as the company claims. Has the market reacted to this news?
Well, I think the market has reacted to the news. It's digesting it now and trying to work its way through these issues we talked about before. The news certainly plays into the outlook, but I think that it should help over the longer term. Unless the FTC has some evidence that their product just doesn't work, what's going to come out is that it does work. They need to tone down their language a little bit, but ultimately, I think this will be a market widening and an exposure event for them to where more people know about them.
Chris, what do you think about this FTC investigation?
Yeah, in a former life, I worked with companies who dealt with things like this a lot. I'm not going to come out here and say this is nothing. But I think in terms of making a decision to invest in the company, I think it's relatively nothing. This has to do more with marketing language, not with product performance. Evolv has acknowledged the fact that they probably went over the FTC's preferred line when it comes to the generalization of what their product did. So yes, they'll have to tone down the language, they'll have to change some of the wording, but does it affect the product performance? Not really. The larger issue that investors are going to want to pay attention to, or at least I would say they want to understand, is Evolv's been getting some criticism because they don't come out and talk about like the rigorous testing that they do or the type of benchmarks that they try to achieve. And Evolv says they don't do it because they don't want to let the bad actors know what they're doing, because that would allow the bad actors time to figure out how to beat it. So some of the Evolv's competitors are crying foul on that. It's just a situation that has to work itself out. I don't think Evolv is going to change the way they do things. Whether or not that impacts you as an investor, something for you to think about.
All right, so investors are, of course, wanting to see if companies can monetize AI. Evolv appears to be doing just that. So is it time to buy Evolv after the post-earnings dip, or is now not the right time to get involved?
Well, I think this is a good play on technology, but I would expect to see some volatility in the price action over the next few weeks or quarters. The market is showing some signs of bottoming, but I think it will be range bound for the foreseeable future. We need to see more news with the FTC, but also with business traction and profitability. But within that range, it looks like traders might be able to target a 75% or 100% gain if you can buy at the low end. It's certainly in a pretty wide range right now. My advice would be to target dips, moves to support, but don't chase the price higher.
Yeah, we've been talking, a lot in this video. If you're a long-term investor, certainly you can get involved with the stock. There's no reason to go all in. There's no reason that you have to just get FOMO and jump in right away. This is a stock you can start out slow, build your position over time, understand that they're probably a couple of years away from profitability according to their own records. Here's something to watch for there. The company in their last earnings report, they said, I think they have about 130 some million of cash. They don't have any debt, but they're still not profitable. So they're burning through about 70 million in cash a year. So actually that aligns kind of nicely to say that within about 2 years, the company should be able to hit that break-even point without having to take on new debt. If I were a long-term investor, I might say, let's wait a couple of quarters. Let's make sure they've been doing some really good numbers year over year in terms of their growth. But now in these next couple of quarters, the comps are going to get tougher. Let's see what they can do there. If they can continue to do that, then that makes that 2-year break-even point look better. If not, okay, maybe you want to hold off a little bit. In terms of trading it, I think I'll go back to something that Thomas said at the beginning. This stock has a lot of short interest in it. It's a day trader's playground. And so you just have to be a little bit concerned about that, because I think the movement that the stock saw in the early part of the summer, I think that was just a short squeeze, and some of the shorts had to cover their position. So, it's something to be careful about if you're looking to trade the stock.
All right. Well, thank you to everyone who joined us in this video. We hope that you found our discussion today valuable. Leave us a comment down below and let us know what you want us to cover next. That's what we're here to do, is to talk about the stocks you're most interested in. So let us know. Until then, we'll see you right back here at Market Beat. Thanks, guys.